All right. Thank you, everybody, for joining us today. We are going to be talking about leading growth through a massive exit and beyond, featuring Freshly and Wikibuy Growth leaders, Adam Gassman and Luke Fernandez. I am so excited about this conversation, both because we have two growth leaders with track records that really do speak for themselves, but also because they are both incredible human beings who we're really proud to have as a part of the Bring Ruckus community here. If I can go over some quick housekeeping for the conversation today. I'd love to do that with you. Next slide, please, Ali. So this webinar is being recorded. All of the questions that we're going to be diving into today were submitted by registrants for this conversation. So we are excited to be able to be diving into the topics that are interesting to you. We will send an email to everybody who registered for the event with the full playback of the conversation. And so keep an eye out for that over the next few days. And then feel free to submit any additional questions that come up in response to the conversation in the Q&A. And if we have time, we will definitely dive into those as well. And with that, I will pass the baton to Anish, who is our founder and CEO here at Bring Ruckus, to introduce himself and introduce you to our panelists.
Hey, my name is Anish. The first portion of my career was helping to run growth, both full-time and as a consultant for different companies for about a decade, and then went on to build an executive search firm focused on hiring kind of leaders across a wide variety of areas with a bit of specialty in growth and marketing. And yeah, that's me and us. Now we're a team of 20 across the globe.
Hey, Adam Gassman here, and have spent the past decade working with content and D2C brands to help them grow, initially launching my own content website after graduating law school and deciding it wasn't what I wanted to do, and grew that to a peak of about 6.8 million monthly active users, and then led digital at Pixable, which was also a content startup, before joining Freshly as an early growth hire, playing a key role leading growth from its early days to its successful $1.5 billion exit to Nestle. And then recently, after leaving Freshly, decided to go out on my own, similar to Anish, and launch a boutique marketing shop that I've been doing since July. And looking forward to talking to you all about the overall process and growing pains we saw at Freshly through the exit in 2021.
All right, what's up, guys? I'm Luke Fernandez. I spent the last 10 years working in tech, first as a product manager, managing engineering and design teams for a company called Mass Relevance. We built the technology that put social content on TV. And then I pivoted into a joint marketing and product role as the second business hire at a company called Wikibuy, where over the course of 6 years, built a large growth function that spanned product marketing, design, and engineering. And today I've been working with early stage consumer brands on building their growth roadmaps, hiring, and executing a lot of the great work that they have cut out for them.
All right, so folks who registered for this event, upon RSVPing, you were all asked to put in a question that you'd like to kind of ask to our experts. And so we cherry picked the most interesting of the questions here, so we can figure out, basically what the audience is interested in learning and knowing. So obviously when you're at an early stage startup, you're kind of doing a little bit of everything, and you kind of have to do everything because you don't have the money, resources, people, et cetera, to do to sort of just invest and scale. But being part of a scaling business on the later end, that's a very different job and a very different role. And you have to kind of adjust to that. So when that transition was happening, was there a really impactful decision that you made? And it doesn't have to be, you don't have to have the pressure of choosing just one impactful decision, but would love to learn any decision or collective of decisions that was really impactful when you were going from being, kind of small and scrappy to the later stages.
I think there's a couple of things. The first is, I don't think the transition is so clear until after the fact in a lot of ways. I think after the fact, when you realize the budgets have dramatically increased, the risks have increased. I think you make the decision and transition from taking a lot of risks that are not necessarily calculated in the early stage of a startup to making very calculated risks and bets on what's going to pay off now, but also for the long term. And I think like one of the most critical decisions is really knowing, even if you could do it a little faster, if you don't start to delegate and elevate to people, you're going to reach a ceiling rather quickly. And it may work for right now, but a month or 2 months down the road, either you'll burn out or your team will burn out. And I think that was definitely one of the more impactful decisions that was made during that process to really set us up for success.
How did you go about delegating in a proper way that made sense and wasn't sort of foreign?
I'm going to be very honest and upfront. It was by learning. There were definitely mistakes made at different parts of it. And I think you really only get better as a manager and as a leader by learning and reading and taking advice from others who have done it before you. I think what's fair to say in most early stage companies versus the large scale corporate entities, it's not like you're given a training manual on how to be the best manager. So it's essentially learning by doing and listening very closely to what people who are working for you and supporting you are doing and what they're saying to make sure that you can kind of hear them and work with them to build the most cohesive unit as well by doing it with them, not just guiding and dictating to them how it should be done.
Thanks. That's super helpful. And yeah, it is very difficult to go from scrappy ICs to delegating, especially with a lot of first-time managers kind of jumping in the organization. How about yourself, Luke, with this same question?
Yeah, I very much a similar train of thought. When you're working as like the first hire to startup, you're focused on solving the problem in your lane. Like you are the go-to person to provide the answer and the best answer for the problem in front of you. When you start scaling up, you move from having to be the person to solve the problem to having to be the person who has to build a system to solve the problem. And that system is kind of a combination of both process and people. On the process side, for a lot of different roles, especially in marketing, there's a set of always on things that your team should be doing from both an offensive and defensive standpoint that probably covers 60% of like where there is value. On the people side, your job becomes finding intelligent, action-oriented people, coaching them to their full potential, and throwing them into that process so that they can nail the 60 to 70% with clear expectations, and then use their own intellectual thinking and action-oriented capability, et cetera, to figure out the other 30 to 40%. And I think it's usually a weird inflection point where people kind of take a step back and say, like, I'm not the person that actually needs to solve every problem anymore. I'm the person that needs to build the system to maximize the number of problems that we're solving.
With that system, like what is it? Like how do you create a system so that people who are a little newer to your organization haven't been through solving as many problems before? How do you make it so that they're not only, I think on one side it's empowered, but on the other side it's actually, confident and know the right decisions to make?
Go ahead.
No, go on, Em.
I was going to say, I think it's critical for process. I would say early on, I was not a fan of process. I was not a fan of creative briefs, to say the least. As you scaled, it became critical that you had someone you could rely on. If you couldn't do it, and I would never say that is one of my strong skills, you had someone who could help guide the processes and make sure you were running efficiently. I think that's probably one of the most key areas, is to notice where your weak link is and to help cover for that and support that, and also understanding where your strong links are to help support the team in that direction as well.
Yeah, I'd say like most, like let's say we're all solving for a formula where in a lot of marketing and growth roles, it's the output metric is some function of volume and return on spend or return on the resources that you throw at that. Before you hire and staff people, you have to understand, have a pretty strong take on what are the inputs necessary to drive those outputs. And you have to like obfuscate yourself from that system and say, okay, what are the sets of processes that we can build such that those inputs are always being fed to the machine in at least a clearly directed way? So is it some threshold of creative testing? Is it some cadence around campaign management? Is it some cadence around competitor analysis and seeing the things that you can take and test yourself? Once you have that basic system in place, if you have a junior employee, you can bring them in, show them your roadmap, help them understand how you arrived at the set of inputs and outputs that you related to, task them with kind of driving those inputs, and then also task them with understanding where those inputs were wrong or where the output itself was wrong, and how, and figuring out how those things should change over time. What are the sets of always on things that we should be doing? What are the sets of always on things that we should stop doing because they provided literally no value to the output metric that we were looking at?
Yeah, I actually particularly like the point of removing certain things that you eventually learn don't add value, because when you start editing process, sometimes you can get really overboard with certain processes and no one's actually stepping back to evaluate, wait, was this actually necessary, or does it just make the process much more lengthy to get anything done and then don't add a lot of value? So
100%. It's actually like a very good part of leadership change. Like as great as I think I was in my role at Wikibuy, I bet there was a lot gained by the company from another marketing leader coming into my position once I left, looking at the system I had built and saying, and like having their own take objectively on the sets of things we were doing and weren't doing that, we should stop or start.
Yeah, that's fascinating. That it looks to the value of someone from the outside, either it's someone new or coming in as like a short-term consultant or anything like that, to take an extra set of eyes and everything that's going on. I guess it's a great pitch for management consulting or other consulting.
Or advising, like hire Adam to be your advisor. So third party objective look at these things.
I appreciate the shout out, Luke. I'll give you a referral fee after the conversation.
Yeah, and for those of you looking for a rent a CMO, Adam is phenomenal, and maybe Luke if you ask nicely to help look at what's going on. Cool. Let's jump into the next one, Allie. Yeah, I mean, both of you had some very lengthy tenures, and Adam actually has a little bit more of an interesting story in that he did leave and then came back to the company that eventually ended up exiting. So he's been on both sides of that. So I'll start with you, because I'm sure your story is pretty interesting there. But long road, most people don't stick around startups for a super long time. Both of you kind of did. Adam's a little bit more of a nuanced story, but would love to learn more about that. Like, what gave you the confidence to stick around? And when you were wavering, what made you waver and what made you kind of no longer waver? So we'd love to dig into that, Adam.
Yeah, of course. I had a feeling my story would be a bit interesting. So what I would say, I think there's some parts that are very typical of the startup story to a successful exit, some parts that are not. Parts that are is, in my first or second month, I think it's fair to say a lot of people didn't think that we were going to make it to a Series B, and did think about, okay, I should start looking, but really enjoyed working with my boss at the time and another marketing person as well, that it felt like a lot of camaraderie and like we were all back up against the wall. It was not individuals. So even though I was looking and thinking about it, each time I always swung back to staying. And I think for any marketing or growth leader that is high up at a successful, fast-growing startup that is getting a lot of press, they'd be lying if at certain points those LinkedIn reach outs for elevated roles were not appealing. And so at points you'd have those conversations, but I think what always brought me back was the people I was working with, and that it did feel like a family. I'm still very close with the early team at Freshly on a regular basis. And I do look at all of them like family, so that played a big part. Eventually, what led me to leave for a bit was we were waiting to add another facility at a certain moment. And so the bulk of the early part of 2020, growth was going to be capped. And so it was really going to be status quo for a little bit. Obviously, no one saw line of sight of what was coming mid 2020. that felt like that wasn't going to be a very big challenge to grow by a few percentage points week over week, and that wouldn't be as fun. I wanted to do something outside of direct to consumer perishable e-com. And so decided to leave and enjoyed my time at Vault Health as well, which is now doing great things for COVID testing across the country. What eventually brought me back is a couple of things. One, family, the camaraderie. The third thing is having the opportunity to drive home an exit, which one is rare for a lot of growth leaders or marketing leaders, but even rarer is being able from an early stage to see it grow and reach that exit. There were a couple of different lanes to go down that wasn't necessarily to sell. Some thoughts were to go public or IPO. And to me, that seemed like a chance that I couldn't give up. And that was what made it really exciting to come back in a lead role and really drive growth and eventually exit to Nestle in October of 2020.
Thanks for that story, by the way. That's super helpful. And that transparency of what made you leave in the first place for that first stint. And yeah, telling a growth person, hey, by the way, we're just not going to really grow this year while we take care of other things. It can be a tough pill to swallow. So definitely understandable. Was it a tough conversation when you moved on to say, hey, by the way, what we're doing strategically will leave me in a place where I can't really do the things I'm great at?
No, look, I think going back to fact, I think like everyone was supportive. They were appreciative for everything that I had done to date, and were appreciative as mentors for when I moved on. And like, we still stayed in touch. It wasn't that. I think one of the things that's most important, and advice that I got and advice that I would give, it's very easy for relationships to fall apart on the way out the door.
Yeah.
You give up on the work. I think there's nothing more critical than making sure you leave on just as good of terms when you got hired. And sometimes that can be difficult, but I think it's really important because we also work in a very small world. Yeah. And I think relationships are critical. And so I valued that, and still to this day have great relationships with everyone on both sides when I departed both Freshly and Vault.
Yeah, absolutely. And it makes that conversation, and like to point to the value of that, to walk out the door in a professional and positive way, even if sometimes there was some level of hurt within you or stress or trauma from whatever that situation was. And look, everyone is welcome to do whatever they think is best for them at their moment. If it just feels really great to give the middle finger on your way out, go do it. But, it also makes the conversation so much easier when they're inviting you back, because on the other side, the employee can feel a certain way and walk out feeling pretty gross about the situation. But the CEO or the founder, whoever is in charge of managing and hiring, can also feel gross about the situation and be super rude to someone out the door. And, I've seen both situations happen a lot. And, when I've seen that happen, either from a founder or CEO being that way, or an employee, it's definitely stunted them, both, where they never picked up the EQ that's necessary to grow in their career that they were hoping for. Even from a founder's perspective, they weren't able to pick up the EQ to keep their employees. And from an employee perspective, they were always wondering why they were never being tapped. And I've talked to multiple people that we interview who are wondering why they're not being tapped for higher level roles. It's, back channeling is very real. And, if you're talking to your former founder or CEO and they're like, hey, this person, like, just, I get it, we didn't get along, we can exit, but it was just the way they left was pretty unsavory. That can definitely get around. So
yeah, and if I could add one thing, the other part for me, my growth as a leader, was Freshly getting me an executive coach. That was incredibly both rewarding professionally and personally, to really increase EQ, but even more, my own self-awareness of impact on employees that were working with me. Even if we were being successful at certain points, that was an eye-opening experience. And I think for anyone on the call that is looking to move up, if they can talk to their company about getting an executive coach, because the power of that is both rewarding for you on a personal level, but rewarding for the company on a long-term level that they have someone who is fully capable of stepping into a big leadership position with a little bit of an investment with an executive coach.
I love that, actually. So we talked about that earlier. The transition from IC to manager is actually pretty rough for a lot of people. And I've seen it be really rough, even like a mid-level manager, not necessarily having a big team, but even one or two people kind of reporting in. It's pretty rough for a lot of people to make that switch. So I like that idea of bringing in external coaches.
How'd you
thanks for that.
Your coach, or how'd the company find them? This is something like a therapist where I think like so many people know they need it, but they stop the moment that it comes to actually finding the person, because it feels incredibly daunting to, amongst a sea of options, like pick the person who's right for you and right for the company.
I think one of the leaders that Freshly had hired is really who pushed the value of executive coaching. Prior to that, I knew what a therapist was. I didn't necessarily know what an executive coach was, or wasn't self-aware enough to know I need an executive coach. Within a couple of weeks of having an executive coach, it was very clear that I was someone who needed an executive coach.
Yeah. Is there a difference between an executive coach and a therapist, or what's, I don't want to get too personal. I don't know if you've had both, but like, what is where does one start and one stop?
For me, I'd say like executive coach wise, I think you're just more focused on professional work, or how to prevent personal life from intruding upon how you are in a professional environment. I think is the only place where there's probably some overlap. But I also think like you're talking to them about your stressors, the things that really drive you to get angry or respond. I think in some ways Slack contributes to unnecessary, like intense conversations that personal conversations don't. It's just how work has changed, because some of the feedback that I've given to people that had worked on my team is when they are complaining about someone's Slack, and I also got this feedback, if you read that with the best possible interpretation from your friend, would you get just as upset? And if the answer is no, then maybe that's not what they meant. And look, sometimes people will be rude, but you reacting doesn't really solve it either.
Yeah, I love that point about Slack. Context is very difficult over text-oriented communications. Great. How about yourself, Luke? What kind of kept you going on the ride all the way through, when obviously, there were opportunities to do other things?
Yeah. So I almost left twice, like had the conversation, had the offer in hand. It basically came down to one, realizing how going through going from like beta to a full exit with a single company, how impactful that would be for my specific personal goals, which were becoming a founder or CEO. And then two, I had a great boss who coached me through those decisions and did it honestly, like looked at the opportunities and said, like, this is where I think it's better and this is where it's not. And if you were to get a better opportunity or want to get a better opportunity, I will actually work with you in the interim to go find something that's better than you're looking at. But one was basically like almost joined a VP of growth for an international startup in Germany, like Series A. The thing I'll say for both of these is like, if you're part of a rocket ship, if you're the first hire, first lane lead, et cetera, as a part of a rocket ship, it can fundamentally change your career, but both from the standpoint of like your career trajectory, because your success is dependent on basically the company's success. And then also from the standpoint of equity, like if you're early on at the right company, you just have a completely different outcome financially than some of the other places. And so I think this is a question that people should actively consider, right? Because joining the right company is one of the only things that can actually create a step function leap in the different roles. But basically, like, had a VP of growth offer at a Series A company in Germany. I think we were 2 years into the Wikibuy journey, still figuring out what our product was and what the product market fit was. And that 1.5, 2 year journey is so exhausting. Like if you've ever been a part of a company that is just feeling like they're treading water, trying to find their place in a market and trying to find how that place is actually scalable. It's pretty tough for somebody who is coming into an opportunity on the basis of trying to find that rocket ship or a function step. And so what happened was, I think I looked at the opportunity, realized that we were at the end of the product market fit journey at Wikibuy, that there was real momentum and that the tide was turning. And the opportunity for me at Wikibuy would be so much greater as somebody who had been there in the beginning, had the product market fit context, than it would have been if I went and joined a company, absorbed a team, and like hadn't been there for the early years or had this super, super deep product and industry knowledge. The second opportunity was basically joining a VC fund. I had like a great opportunity to join what I consider to be one of the best consumer VC funds in San Francisco. And when I zoomed out, I said, what do I want to do? I want to be a founder and CEO. What's going to get me there? Well, to get there, I have to be both somebody who can build a vision, but be an incredible operator. And while VC is shiny and oftentimes like a great pedigree stamp on your profile, the hands-on experience of scaling a company, owning the evolution of strategy at different phases, hiring and coaching a team, it's just not there. Like, it may help you develop a vision and the means to identify big market opportunities, but it doesn't help you become a great operator. And I realized that, being a part of a high growth startup for another few years was going to be the thing that gave me the operating experience that I felt was even more impactful going to start something myself in the future.
That's great. And one thing that's common in both of your stories was there was sort of someone above you that you enjoyed working with. And it seems like who nurtured you and was fairly honest. And, Adam, in your case, let you go, but then still maintain a great relationship, didn't do something jerky or anything like that. And Luke, similar situation, except you just decided to stay instead of leaving, which is, when I talk to people and in terms of having a career chat, obviously, my role fundamentally, is as a vulture and, getting people to kind of move around different organizations. But no, fundamentally, I tell them, like, look, think about how much enjoyment you have working with your team currently, and do you enjoy working for the person above you? And if that's in a good place, you should really think twice about new opportunities, because the grass is not always greener, and funding and press and all those things that add some level of excitement to certain companies generally do not outweigh a group of people that you may not enjoy working with. So
I think the grass is different.
That's a good point.
Yeah, and someone gave me that feedback as well as I was making that decision, and I think it's spot on. There's going to be some upsides of the new place and some downsides. It's just, what's the different environment that you want to be in, and what outweighs it the most, I think, is probably the most fairest way to look at it. It is never going to be completely greener on the other side.
No. And also, like, intuition and just sort of, I think emotion goes a lot into it, right? If you're burnt out, if you're sick of the people you're working with, your emotions are going to push you out. But if you feel like, hey, maybe this company won't work out, but I actually enjoy some of these people, hey, why not just go along for the ride a little bit longer? At least I know I'm going to enjoy coming to work. So yeah, a lot of what gets our candidates kind of moving forward into other new roles or keeps them at their current jobs is probably more emotional than logical. Cool. Let's jump on the next one, Ellie. And thanks for sharing both of your stories as transparently as possible, and the other opportunities are put in front of you. Yeah, this kind of leads to some of our earlier questions, but with more specifics. So for one quick question, were both of you kind of like ICs when you joined your organizations?
Yep, I was.
Yeah.
Great. And then, like, by the time it was exit time, like, how large were those teams? And then also, what did you learn when attempting to structure it? And did you make any mistakes with structuring the teams along the way?
Yeah, definitely. I'll jump in on this one. Definitely made mistakes. I think like the biggest mistake we made as a company, and this comes down to me, is like we did not hire quickly enough where we needed to. Like, marketing is an operationally intensive organization, and there's ways to get leverage from agencies or through hiring. I don't think we did either one of them quickly enough. Like, we wanted to be the smartest people in the room who were also the best executors in the room. And, I think when we look at kind of the bigger player in our space and what they did differently, this was one of the biggest differences. In the beginning, like when you're in a beta or like pre-market, a lot of the question is product market fit, right? So like my role started out assisting the product team, running a beta, like talking to communities, getting the feedback from the specific people who should be using our product, so that we could make changes, whether it was on activation or retention, that got us to a place that we felt like had good enough unit economics to go raise a round and then to start spending money against it. So once we had that round, the problem really became product channel fit, right? Like how do we scale with the economics that we have? And the team ended up being built kind of as a function of that. Like, I, as an IC, ran a portfolio style test, tested a bunch of different channels, found the ones that worked well for us and doubled down on them, and started building an organization to kind of unlock the growth on that channel, so that I could then go heads down strategy on another channel, and build a similar org. And so by the time we exited Capital One, like, I'd say we were a fairly light team. There were probably 6-ish direct people on our team, me, a mid-level marketer that's doing a lot of management across performance marketing and product management, 2 engineers, and then 2 creatives, mix of like producer and design, to help fuel testing across the entire funnel that we were a part of. And so, I'd say like strategy was kind of owned by me and my boss, the chief business officer and co-founder, which channels to prioritize on, what were the biggest levers on those channels to pull, and how we were going to get leverage against those channels. And then we slowly built like a really great execution org across like creative and engineering. And we had great support resources from other organizations like design and QA, and places where we could plug in and out.
Awesome. Any mistakes that you made along the way that you can kind of point to in terms of structuring those teams? I think, I guess what you talked about, just not hiring fast enough. Anything structure wise that kind of like ended up that you had to switch it along the way based off of iterations and learning?
Yeah, so a couple different things. I think we were always very proud that like the first hires we made were engineers. We had the mantra that like you can automate or augment your way out of almost every single piece of execution, and the way to do that was via engineering. When I look back on that, I like in hindsight, I think we did not appreciate the amount of technical debt that was created in like building your own systems for bid and budget management or creative production, et cetera. And so we ended up spending so much more time building systems that were probably only 5% better than out of the box solutions that we could have worked with specific vendors on. And so I probably would have spent less time building like in internal tech, more time working with vendors on that, and then would have used those hires on people who could drive strategy and thinking and analysis on the channels, not necessarily execution.
Okay, that makes a lot of sense. Thanks for that. How about yourself, Adam?
Yes, I would say first off, a lot of trial and error that we went through to find the right hires and the right structure. I think starting first with the mistake that allow us to probably reflect a bit more is earlier parts, hiring to fill the hole of today, not hiring to fill the hole that we're going to see 12 months from now and where the world will likely be. I think a perfect example is just looking at where we are today versus 12 months ago. 12 months ago, we were still dealing with artificially low rates from COVID. 12 months from now, we're not seeing that at all. And the things companies are dealing with right now are very different from 12 months ago. And then you go 12 months back, it's even more different when you look at January of 2020 versus January of 2021. So I think that was one of the biggest mistakes we had made. What then became a strength was really focused on hiring for where we see we need to be 12, 18 months down the road, and led to a structure that had a new customer growth side of the team, had an onboarding and loyalty and creative operations that was servicing both of them to produce best-in-class content on both sides, both new customer growth and also onboarding and loyalty. And one of the key things was making sure the KPIs were aligned and they were not totally separate and in silos, because that would create unnecessary conflict and did at different points throughout the journey. And I think that was very key. Were there mistakes? Definitely. But at each point we learned, got a little better, and made the tweaks necessary to build the team. The team was probably still a little bit lean right as we exited, but it was in a good place for us to continue to grow.
Makes a lot of sense. Thanks for that, Adam. You jump on the next one, Ellie. Yeah. Does this change? So when you're defining KPIs and strategies, you know, early on, it's probably some target of ROAS, target of new customers you'd like to drive, some level of target of repeat purchase rates, or for a subscription product, you know, lowering churn. Does that change over time? Are there some new kind of nuanced things that pop into there as a business and a company matures? Or it's kind of the same goals, but maybe different ways to back into them?
I think there are more things that contribute. I think beyond the KPIs at different phases, it's also what investors are asking for. That changes, as does then the KPIs within internal companies. I think the KPIs should be highly dependent upon where you are from a traction standpoint, your business model, what your AOV is, to really understand whether you are getting market adoption or not, and not necessarily CAC. The problem tends to be, and I'm sure, Luke, you've seen it at companies you've advised in earlier stages, is early on, it's just only CAC. LTV will figure out later on. Retention will figure out later on. Later on, it's CAC matters a little less. We should only focus on retention. Both should be optimized early on in a balanced way and focused in a very balanced way, that nobody in the industry is just going to give you complete credit because you have the lowest CAC in the world, but nobody stays around. You have a leaky bucket. On the other side, I've also seen companies that talk a lot about how great their retention is, but their new customer CAC's like $500 and they can't grow. And neither of those are great companies. Finding a balanced approach and building your outcome KPIs and North Star metrics that way is what you will do to set yourself up for a long-term exit or be best positioned for that. Then say at stage one, to raise the next round, we got to grow and CAC's got to be X. Stage two, we got to do this. And stage three, the more balanced you are from the beginning, the easier it will be to stay focused on both and not ignore one for the other, which ultimately inevitably causes problems internally.
That's awesome. I have a lot of thoughts on North Star metrics, actually, and ones that I feel like I've seen that I don't feel like I cared about, but was forced to think about because someone else cared about it. Mainly someone like read a blog post and it said that you should care about this particular metric without any logic behind thinking all the way through it. But yeah, would love your thoughts on that as well, Luke, in terms of the different phases and the strategies and KPIs and how that changed. And that was a great answer, Adam, where everyone's just going to be focused on acquisition at the beginning, but once they learn that churn is real, you know, what do you do then?
Yeah, there's a couple points here, most of which are echoing Adam. Obviously, there are like performance metrics that you're always trying to solve for, and it's some version of volume and return on spend. And I think the expectations of those change as you grow over time. But the subtle nuance that I think like Adam is calling out is, if you're a VC-backed company, there are expectations for those metrics, and in many scenarios they kind of create a minimum KPI that you need to solve for. The raised expectations are almost always around growth rates and the payback periods, and then you know, you have the cash constraints of the business as well, which also play a role in setting the return or the payback metric. How quickly are you using the cash, and how quickly is it coming back to the business? And I think that's just like a huge learning for somebody new to VC company, is like, hey, listen, there is actually a rate that we have to be able to put on a slide in order to attract a certain type of investor. I think over time, depending on your business, what you see happen is teams get more confident on their ability to bet on the future improvements of those rates. Like, you may target a lower payback in the very beginning, but as you learn the industry, as you're in a consumer SaaS product, as your monetization team has a clearer and clearer roadmap and a better and better track record of kind of like hitting that roadmap and making improvements, then you can start to lean a bit more aggressively on, like expected payback or expected ROAS in 3 or 6 months from now. And I think that teams kind of should be, as soon as they have clarity on those potential improvements, they should be leaning in aggressively. The truth is that most teams lean in too aggressively early on without understanding some super basic fundamentals. What are their unit economics and what are the roadmaps that are going to actually change those? But there are also those teams out there who have a reason to bet on themselves because of the work and progress that they've made against those metrics, and sometimes don't lean into as aggressively as they should. To the earlier comments earlier about how the role changes from IC to team lead, some of the KPIs that you start to think about as a people leader are more about your employees' KPIs, partially how they're being scored in the organization, partially how their lanes are laddering up to the core KPIs. But I think I'd spend more and more time thinking about kind of the performance in some quantitative format of my individual team members than I do necessarily only the KPI that I'm in charge of.
That makes a lot of sense, and I like that you're not, when you grow a team, they're not just people there to do the things that you want them to do. You're there to be responsible for making them successful, and what's going to make each of them successful is very different. And you have to put that under your shoulder to make sure they're in a good place. And going back to KPIs, I think there's multiple KPIs that I hear companies talking about improving and being proud of themselves, where I feel like they were sort of useless stuff. And I think not useless, but not the North Star. I hear a lot of companies talk about conversion rates pumping up, and I think that's a poor North Star. And I've had to untalk and lose this battle very frequently with a lot of founders that like conversion rate is a terrible metric in terms of the growth and success of your business. It's a great metric in terms of A/B testing. If you have 8 different pages, of course you go with the highest conversion rate. But if you as a company are growing your conversion rates year over year, that just might mean you're over segmenting and your foreseeable population is low. And then the one I really don't love is AOV either. It doesn't matter if the basket size is not high as long as the top line is great. And lowering your basket size and lowering your prices is a great strategy. Everyone talks terribly about discounters. I'm a big fan of discounters. And I know, Luke, you built a business that is pretty much around helping people get discounts. And so, I think both of those are terrible kind of North Stars that I've seen companies over index on, when I think they could really just index on top line and margin and really keep it as kind of simplistic as that in terms of North Stars.
One thing I don't think either me or Luke talked about, but I think we would both agree, certain stages of your business, there are going to be KPIs you just have to hit to keep the lights on,
Sure.
Especially when you're a venture-backed company, and that could change. And that leads to do things that are very short-term focused, and that should only truly be short-term focused.
Yeah, definitely. Some sales are out of desperation, and that's okay. If someone, I used to work in an organization that basically said, if you don't hit your quarterly numbers, we're just going to start firing people. And they were very, very open about that. Like, people are just going to lose their jobs. And these were, I was a little bit younger in my career, but there's a lot of people who were kind of pretty scared about losing their jobs. And so what happened at the end of every quarter? 70% sale. Everything's on sale. Everything is discounted. All right, we saved your jobs for another quarter. So it was a fascinating experience on poor management, and then what happens with poor management as well. Cool. Thanks for that. Ali, we can jump to the next one. This is a good one. It's probably very difficult to also pick one thing. And oftentimes mistakes are the only ways to grow. So, it's good to make them as long as the ending is in a positive place. Otherwise, how would you ever learn anything? But looking back, are there certain things that you're like, oh yeah, maybe if I did this thing differently or this thing differently, this could have gone a little bit better. Yeah.
I would definitely say there are a number. I think the most that call out Freshly, different from Wikibuy, was very day-to-day, given it was a perishable business, weekly capacity, you had to hit a number. So oftentimes your head was in the day-to-day and you didn't spend enough time above level thinking long-term and doing more deep thinking about things to implement over the course of the next 12, 18 months. And I think that's one thing that I wish I did more of. I think the secondary thing is spending more time planning for the worst case scenario and how to operate within the worst case scenario than planning what is the most realistic scenario and how to operate within that and what levers you're going to pull. If things are going a little south here and a little better there, what are you going to do? Because I think like we all learned a year and a half, or I guess 2 years ago now, the unexpected can happen and it continue to happen. And the better prepared you are for the worst case scenario, I think just overall, the better you are prepared to handle as much as possible. I don't know that no matter what you did in 2020 planning would have prepared you properly for the year we had. But I think the more you plan for worst case scenarios, I think the better position you would have been.
And with that, so that's just really risk planning and yeah, okay. So risk planning really of things that could come down the pipe and contingency plans of what to do in case they do. Okay. How about yourself, Luke?
Super different business, and I think like some of the answers is going to color that. You know, I'm hesitant to give my answer because I think it might be fueling like a very dangerous fire for early stage companies. Like I think like most early stage companies burn because they're not thoughtful enough, because they lean in too aggressively on building teams, because they lean in too aggressively on spending dollars without a clear return. And they basically end up in a place where they look at their bank account and realize that not only are they out of money, but their metrics suggest that they'll never be able to raise another round. I would characterize maybe the thing that we could have done better as being the exact opposite of that. Like we were not aggressive enough in building our organization and in flexing dollars where they were. And that kind of comes down to just like people leverage. Like we didn't probably have enough people where we needed them, and we didn't bring in agencies where they could have dramatically accelerated execution. The truth is like returns on great employees are in the hundreds to thousands of percents. Like if there's any variable in your formula, if you get the right dedicated owner for them, they can 2 or 4x that variable. And sometimes organizations are so hesitant to make that $100,000, $150,000 investment on that person, but at the same time have absolutely no problem raising the budgets on their ad campaigns to just dip in a little bit more aggressively to return on ad spend. And I think it's, you know, we had a little bit of short-sighted thinking there, and I totally take credit for that as a leader, where people could have provided us a better return than just leaning into budgets in some scenarios. Again, I say this out of caution because I think actually most early stage companies don't need to hear be more aggressive. But somebody once gave me an analogy around scaling that said, scaling is like building muscle. You have to bulk and then cut. You can't build muscle quickly by dieting. And sometimes I think like the hiring approach I took was a little bit more diet oriented. Like you know, like the answer is almost different, the completely opposite of Adam's, where I feel like we should have planned for what could have gone right. There's a ton of great opportunities that were scoped, and we didn't staff them quickly enough. And you know, it's we had a major competitor in our space, Honey, who had a completely different outcome than us at a different valuation. And that was because they scaled much more quickly, and that demanded a completely different premium in the market.
Yeah, absolutely. That makes a lot of sense. And the whole point of these conversations with 2 leaders is to see where some of your thoughts, you know, come together in similarity and then also kind of diverge. And I think one thing Adam mentioned, actually, I forget which one of you 2 mentioned, to tell the truth, but it talked about like hiring for 12 months down the road instead of right now. One thing I actually pitch to our clients regularly is hire for right now, hire for immediate needs, and don't hire all of our clients want to hire people who have the hottest backgrounds, coming out of the hottest companies that have scaled the best and have the best track records. Those aren't always the best people for early stage anymore, right? Those aren't the right ones because they're used to having resources. And the next thing they want to do maybe is a little bit bigger. And so it ends up becoming a mismatch very consistently with someone who's just seen things at massive scale, going back to something. Now, that's not always the case. Some people who've seen things at massive scale really did not enjoy the level of bureaucracy they have to deal with at that point. But yeah, I've generally been someone who says, okay, you have these problems right now. Don't overhire and think about what's coming down the pipe in the next 12 months, and do it in a step ladder fashion. Don't hire 5 people right now because you foresee this 12 months down the road. Hire 1 person right now, then the next person, then the next person, then the next person. Now, is that true for every single organization? No. If you're swinging for the fences aggressively and you want to be a decacorn in 2 years and you got the VC backing to do it, swing, go aggressive. And in today's market, especially, the VCs will keep backing you. So, that advice is not always correct. And again, it goes back to being situational with company by company and what your individual goals are, and even appetite for iterative hiring and iterative learning versus just screw it and, just go heavy in every direction. So yeah, I guess there isn't a right answer for every single situation.
I think a lot of the over hiring or early hiring issues happen because like the opportunity isn't scoped well enough, right? It's more like this person has a shiny background, let's bring them in, they'll create value. Or we think that something that we want to do is interesting, let's go hire somebody to figure it out. I think when you set a quality bar around knowing, having enough confidence that that's a direction that you guys need to go in, then you kind of can't let yourself be limited by going in that direction yourself long enough such that you've built the initial system and need to go hire somebody. It's a weird balancing act of like having enough context and not.
The one thing I'd also add is on the hiring front, I think some of the best hires were people that were incredibly intelligent, super hardworking, that were not necessarily experts in the particular channel or area they took on to control, that were so dedicated to it, I'd say myself included early on, that they were the best at it. And I think sometimes, and we saw it also at Freshly, hiring people with the greatest resume and the greatest companies, they come and expect to be treated a certain way and care a little bit less about delivering and more about providing theories, which can be problematic as you're trying to scale and grow and really need people's brains and minds focused on doing and planning, because the theories are great, but they just don't work to grow a company 10x or 15x. That is the ask that you've been tasked with in those leadership roles.
That was exactly the same next thing I was going to say, which is something I really try to push on our founders, and more often than not lose, because they want that shiny background. And look, I get it. Our situation is very unique because the company is paying us a pretty penny to go find these people. And, when we find those people, they just want the shiniest backgrounds. But there's something really exciting about, not to wax too poetic about back in my day, but 10 to 15 years ago, when people were building startups, it was a group of people, startups were not for people who were very experienced to be employees. And it was meant to be a group of people who were inexperienced, shove them all in a room for a year. Something magical might come out of it, of a bunch of people kind of not knowing what they're doing, but they all had a ton of optimism and trying to figure out how to make it work. And I think you really alluded to that, Adam, that there's a lot of great hires, and not knowing what you're doing is a great motivator to push harder, because you want to challenge yourself. You want to face those lessons and grow in your career. And so I think fast forward now, it's completely changed, because back 10 to 15 years ago, you didn't have 40 different startups that have come out in the food kit space. You didn't have 15 to 20 different coupon tech providers. Now everyone's just get me someone else who's super senior from another coupon tech provider, get me someone else who's sort of scaled another food kit company. And realistically, there's a lot of value in someone who's never done either joining that organization. And taking it upon themselves to work harder because of that. And not necessarily the hours, but just the intent to get over a learning curve. So, and I think both of you had little to no experience when you joined both of your companies in the spaces that you joined, and that propelled you. I've never recruited before running a recruiting firm. Like I didn't know what I was doing. I was figuring it out. Still am. And so, yeah, I think for all the companies hiring out there, there's a lot of value in smart, hungry people who don't know what they're doing, but are dedicated to and interested for their own personal careers to grow.
1,000%. You're always balancing potential and experience with any candidate that you're hiring. And time again, I'd bet over potential in the form of like raw intellect and action orientedism, right? Than I would around experience time and time again.
Absolutely. Well, this was awesome. I learned a ton from this conversation. Thanks a lot to you, Adam. Thanks a lot to you, Luke. This was awesome. And we're going to have this recorded. We're going to send it out to all the attendees. And thanks a lot.
Thank you so much.
Always a pleasure, Anish. Thanks so much, man.
As always. Yeah, both of you. Bye.